I believe that the quarter 2 and first half results are in line with our expectations. We are progressing towards meeting our goal for financial year 20. Although the revenue growth is in single digits, the bottom line has shown a significant uptick as compared to last year. The substantial increase in profit is primarily because of additional gross contribution on increased sales and lower financial costs. Evox is doing substantially well. It became EBITDA positive in the previous quarter and has registered 59% growth against the last quarter. Now, please allow me to take you through the financial highlights. Sales in the quarter 2 financial year 20 is up by 8% year on year to INR 1,114 million from INR 1,032 million in quarter 2 financial year 19. EBITDA for quarter 2 financial year 20 increased to INR 473 million from INR 421 million in quarter 2 financial year 19, up 12%. Net profit is increased by 23% in quarter 2 financial year 20 to INR 318 million from INR 259 million in quarter 2 financial year 19. Sales for H1 financial year 20 is up by 7% year to date to INR 2,218 million from INR 2,074 million in H1 financial year 19. EBITDA for H1 financial year 20 is increased to INR 1,008 million from INR 905 million in H1 financial year 19, up 11%. H1 financial year 20 net profit rose by 15% to INR 658 million from INR 571 million in H1 financial year 19. Now we would like to open the floor for questions.
Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touch-tone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Dharmik Patel from Active Alpha. Please go ahead.
Can you help me with the revenue, EBITDA and PAT for Evox?
Yes, 1 minute.
Hello.
Just a moment.
Just a minute.
So, for Evox, the top line is 68 million and EBITDA is 13 million. And then we have amortization of about 17 million for this quarter as compared to the previous quarter of top line of 56.5 million and EBITDA of about 8.2 million and amortization of about 15 million.
Okay. Now with respect to the closure of Malaysian subsidiary, I would understand what were the particular reasons for us to take this decision, because we acquired this subsidiary in 2017 and within 2 years we had to make a decision of closing this down.
Yeah, so it is like let me tell you, I mean, we have been maintaining that particular company, so it is every time all the trials and all the efforts being as such is driven by our parent company. So it was another setup, and we could see a lot of administrative and then compliances. All those requirements are there, and there are expenses, unwanted expenses, which we thought we don't need at this point of time, and we will continue to work on that from India in any case. So we thought there is no point in continuing that particular company as such. So we don't need a separate entity as such over there. Does it satisfy your question?
Any reduction in the effort that you're making in exploring the opportunities with regard to palm oil, given the closure subsidiary, or will it continue at the current pace?
No, it is only, revised arrangement you can say in a way, just to address some, extra overhead. We will continue with our efforts.
But this is a very matured industry and it will take its own time. We don't see in the near future any sales is coming up, so we don't want to spend the money continuously.
What do you see the growth drivers of this company going forward for next 2 years?
Next 2 years we see probiotic, human nutrition, animal feed, biocatalyst, these and the food industry, bakery industry. These are the areas which will take us further.
Product launches planned?
Some of them are in the pipeline and some of them are being launched.
Now I have a few questions on financials. So first, what are the reasons of cost of material consuming? It's doubled over the last year for this quarter.
Last year, or you are saying on quarter to quarter?
Quarter to quarter.
Yeah, quarter to quarter, yes. So, when you see the raw material, it is because of, some changes on product side when the cell mix is changed, number one. Number two, if you really compare YTD numbers, you will not see any drastic change. It is in quarter to quarter, the change you are observing on, right? But if you see year-to-date numbers are more or less similar. Last year we spent about, I think, 18% on raw material consumption, and this time it is about 19%. So there is a 1% extra, and that comes because of, some changes in the price of the input, whatever we use. So there is no major change as such. So you don't, you look at the quarter to quarter basis, it is like we have to be, you need to see it on a broader perspective of on a year-to-year basis.
Oh, sure. What was the change in other equity, because it has increased by 10% from FY19 figure, that is from 656 crores to 721 in the first half. So,
pardon?
Can you repeat?
Really change in other equity component of your balance sheet.
OCI is because that is because of the translation reserves. It happens because of the translation of our foreign subsidiary companies, because those are in different currencies, so we have to translate them in INR. So all the assets and liabilities are translated, and the difference is now taken through OCI.
All right. Understood. With respect to the line item in cash flow statement, this increase in provisions for the for first half, that is 11.7 crores. What are these provisions for?
Let me tell you, I think you need to see some kind of a regrouping and reclassification is required as such. So it is net, you have to see with reference to other current liabilities. So provisions and other current liabilities, both you have to merge and then you have to look at it. So last time I think it was 79 million, this time it is about 89 million.
And my last question is, with respect to EBITDA calculations, I believe I am getting confused somewhere in calculations, because if you...
No, we don't add, we don't add the other income in this.
All right. Okay. All right, understood. And my last, it's not a question, but it's a concern. We have been to reach out to the investor relations team and also the management team, but we have been unsuccessful since last few months. So it's, No, we are working on that. We are definitely working on that. So going forward, probably you will observe the better this thing, PR exercise.
To come and visit the plant and the facilities and all that stuff, but it's proven to be very, very challenging. Although, despite our very concerted effort, can you assure us that it would? If we reach out again, maybe this week or the week after, that we have a different response.
Thank you.
Maybe next week. Yeah, sorry.
Before we take the next question, we would like to remind participants that you may press star and 1 to ask a question. The next question is from the line of Amar Moria from Alpha Accurate Advisors. Please go ahead.
Yeah. So thanks a lot for the opportunity. I have two, three questions. Number one, sir, if I see the current revenue run rate, 7% odd, but we had guided for around about a 12% kind of a revenue growth on a full year basis. So are we maintaining our revenue guidance?
Sir, we said about 10%.
So I think the range was 10 to 12%. Even though if it is a 10%, then probably in Q3 and Q4 we will need a pretty higher revenue numbers because your run rate is not crossing more than 110 crores, and that is probably from last, if I see, around about 7 to 8 quarters, the revenue is hovering around 100 and 110 crores. So if you want to even give the 10% plus revenue growth number, then also you have to cross something around 120 to 125 crores kind of a run rate for Q3 and Q4. So are we confident on that?
Amar, at this point of time, we are maintaining it, but we are facing a lot of challenges in the US market. At the same time, we are facing some challenges on the Sera market in Indian area. On top of that, we are trying to do the best, but at this point of time, we feel that we should be able to maintain 10% revenue growth.
Okay. And secondly, sir, if I see your margin, we had recovered our margin to around 41, 45, 48%, and then now at 42%. But is it fair to assume that, last year you had closed a margin at 43%? There will be a margin inch up from the year-over-year basis, like full year it was 43%. So can we expect some margin improvement given that now we are focusing more on the human nutraceutical, probiotic, which are relatively a better margin business than the traditional business?
Amar, probably this year we will maintain the same range which we used to give from 40 to 48, right? But we feel that as the growth will come up, our margins will improve in future. But this year probably we'll maintain the same.
So last year it was 43%. Is it fair to assume that you will at least post the 43 number, or where will be deceleration from that number also?
That should be around the same.
That should be around the same, Amar.
Yeah. Okay. Because why I'm asking you this thing, sir, if that is the number, then probably, the PAT growth would be very, very negligible. The kind of, so what my concern is what kind of EBITDA growth then we will see? Because, if we post 43 crores number, so is it fair to assume that, at least there will be a 14-15% EBITDA growth and around 17% kind of a PAT growth we'll be able to post in 20?
Amar, we feel that is possible at this point of time.
Okay. And what would be the top client contribution in this particular quarter?
Top line contribution?
Top client contribution.
At the moment, it's about 14%.
It's about 14%. And I think it has come down from 20 to 14, right?
Last quarter was again 14%.
Okay, again 14%. Okay. Thank you, sir. Thank you.
Thank you. The next question is from the line of Akash Satale, an individual investor. Please go ahead.
Hello.
Yes, Akash.
Okay. I had a question. It's regarding the promoters. I'm a new investor in the company, and I've been just analyzing the company and going through the report for the past 2 years and all the recent developments. I see that there has been a promoter change in the last 1 year or so. Mr. C.L. Rathi was the managing director, and Piyush Rathi was there, and now it's Mr. V.L. Rathi. So can you please give me more details about this change in the promotership?
So this is like an event which is now already in the everywhere on BSE and NSE. There's a change in the sense Mr. Vasant Rathi was promoter earlier also, and he continues to be there. And only change what you have observed is the the one which has happened in September 2018.
What happened in September 2018? Can you?
I mean, the one of the promoters, he is exit from the company.
Okay. So that's what I wanted to understand. So Mr. C.L. Rathi has exited from the company.
Right.
And Mr. Piyush Rathi has also.
Yeah, he has also resigned subsequently.
Okay, and they have sold their stake in the company?
No, they continue to hold shares about 15% in the company, and remaining stake they have sold.
And they are not in the management team now?
Yeah, you're right.
Okay, that's it. Thank you.
Thank you. The next question is from the line of Rohit Sinha from Emkay Global. Please go ahead.
Thank you, sir, for taking my question. Just wanted to know, since we are looking for better growth, expecting a better growth in second half, so we from the human nutraceutical, so how it would be from, whether it would be from India or outside India or a mix of that thing? I mean, geographically, where we are seeing a better growth in the second half?
This time, this year we are feeling the better growth will still come from the India.
Okay. And probably going on looking after the industrial segment, still we are not seeing that kind of industry growth right now. So probably second half would also be on the lower side from the industrial segment.
Industrial segment will continue to be about 14-15% of our total top line.
Okay. That's it from my side.
Thank you.
Thank you. A reminder to the participants, anyone who wishes to ask a question may please press star and 1 at this time. The next question is from the line of Dharmik Patel from Active Alpha. Please go ahead.
Yes, Ramesh.
Dharmik, your line is unmuted. Please go ahead with your questions.
Hello, am I audible?
Yes, now you're audible.
What is the R&D expense for this quarter?
Yeah, I'll just R&D expenses for this quarter.
40 million. I guess, Dharmik, 40 million, but we will recheck. Yeah, it's 40 million.
All right, and also I did ask previously that when can we expect, when can we get in touch with you?
Next week, Ramesh. Next week.
Sure, fine. All right. Okay. Thank you.
Thank you, sir.
Thank you. A reminder to the participants, anyone who wishes to ask a question may please press star and 1 at this time.
Yeah, 40 million दोनों मिला के 85%.
Anyone who wishes to ask a question may press star and 1. The next question is from the line of Dhiral Shah from Phillip Capital. Please go ahead.
Yeah, good afternoon, sir.
Good afternoon.
At existing capacity which we have, what kind of revenue we can generate at optimum level?
We feel that we can double the revenue.
Okay, so utilization is only 50%, sir?
Yeah, roughly.
So by when, sir, you are targeting doubling the revenue?
It's a very good question. It is always we need to strive for the better. So hopefully, maybe, next 3 years we target that we should really utilize our 100% capacity.
And sir, with margins, you are guiding between 42 to 48%. So as and when our utilization, goes up, do you feel, we can even generate more than 50% margin?
Yes, you are right, absolutely right. You got it. I mean, because fixed expenses remain same. So,
Most of the fixed expenses, if not.
Yeah.
Okay. And so what will drive this growth? Hello?
Yeah. So as I said earlier, like most of the growth will come from the probiotics, biocatalyst, the biocatalyst range, what we do have in the Evox. So we will explore those range, and the animal feed market.
Okay. Okay. Understood, sir. Okay. So we'll be in touch next week then.
Thank you. Thank you very much.
Thank you. The next question is from the line of Amar Moria from Alpha Accurate Advisors. Please go ahead.
Yeah, so thanks a lot for the opportunity again. So I wanted to understand, when you say you are seeing some pressure in the core markets of US as well as in the India. Is it like the competitive intensity in the industry has increased, or it is general slowdown? What is the kind of, because if I talk to few other players, they are sounding very optimistic about their export business.
Our US business is, I think it's not the competitive, but it's really slowed down. And because there is no growth on the top customer as well, and the revenues are going down from them too. So US, it's not a competition, but it's a slowdown. When it comes to India, there is some competitive pressures what we are feeling on the Sera market, and that's why we are diversifying also into the other revenue areas.
Okay. When you say Sera market, meaning pet market, right?
Sorry?
When you say in India, Sera market meaning what? Pet food market, correct?
Human nutrition.
Yeah, human nutrition. Okay. Human nutrition market. So, sir, when you say the top customers are not growing or seeing some slowdown in US, so is it like a portfolio issue for you? Currently, then how we are going to come back from this?
See, there are a lot of things which are going up, right? Even last quarter, if I recollect right, besides the top client, we had a 23% of growth last quarter. So we are working on the other customers, right? And we are trying to make other customers big.
Correct.
Okay? So this is ongoing process. Will take some time.
So sir, then in that case, a pretty a medium-term question, not on a quarter-to-quarter basis. If I see your last 2 years run rate, probably would be in mid-single digit or very low double-digit number, kind of 7% growth in 19 and 10% growth, which we are guiding for 20. When we are going to see a very healthy kind of a double-digit growth, and what we should see going forward, 21, 22.
Amar, as you know, we were consolidating. This last year was a consolidation. This year is again going to be a consolidation year. Right? We are putting all our R&Ds and what is required for the future growth in pipeline. Right? So most probably next year, second half, we should have a better growth.
Okay, so you are saying that, it is still today the 4 quarter away for you to consolidate and then from there on to grow.
That's right, Amar. That is at this point of time, this is our expectations.
And what can go wrong in this expectation, sir, then in that case?
So that is the reason it is taking time. So we are very cautious about this, that we need to address all, whatever risk, what you are talking about is what can go wrong, and that is the reason we are giving a timeline of 1 year, because, a lot of efforts are being now put into it.
Okay, sir.
Thank you.
Thank you. As there are no further questions, I now hand the conference over to Mr. Mukund Kabra for closing comments.
Thank you, everyone, for your participation.
I look forward.
we will look forward. Thank you very much. Bye-bye.
Thank you.